All right, guys, welcome back to your accurate weather forecast. Just kidding. Just another chart talk. Again, if you guys on the East Coast, you know how much snow we just got. We just got back from our Vermont trip we do every year. It's great that we got, the amount of snow that we got and still freezing here in Jersey with, 2+feet of snow. So with that, let's jump right into the market. We're done with our accurate weather forecast. So again, for the market this past week or so, we've had a little bit of chop. We had the tariff fears back off, Trump buying Greenland, he's not buying Greenland. So it's been a little bit of volatility, but overall, the uptrend or the breakout stage that we've been in since May still is intact. This trend line, we continue to see higher highs and higher lows, very nice uptrending market. We survived that painful 2% pullback. And, little shake out of this mini pivot low, but everything else, still looks very strong. Market has definitely been battling with this 700 level, psychological level of resistance. Again, all these whole numbers, 700, 800, 900, 1,000, even you think of Bitcoin at 10,000, 100,000, all these big round numbers just create psychological resistance. So we should expect some resistance to get created in this area, just like we're going to see silver creating resistance at $100 an ounce. Same thing with gold at 3,000. These big round numbers just, create resistance. So, market is, less than 1% away from retesting the all-time highs from a few weeks ago. We should expect this area to be met with resistance. We talk about this as, the retest area, the first retest ultimate resistance. So the big, the key thing this week is going to be the Fed on Wednesday. Again, personally, I don't think Powell's going to cut rates just because of the pressure he's been getting from the Trump administration. But again, he's definitely leaned on the data-dependent rhetoric. So if there's some reason for him to cut rates, he will. But I wouldn't be betting the farm on any rate cuts on Wednesday. Again, typically going into Fed weeks, the market's kind of very slow going into that announcement. Again, 2:00 on Wednesday, you'll see some knee-jerk reactions to the upside and the downside. So, most people aren't going to be, doing much until that announcement, comes out. But for now, short-term pivot low is 680 in the SPY. Resistance, we're just going to call it 700. Really, it's a 695 area. So very tight range. We would like to see continuation higher. But if this trend line does break, we should expect more of a broader flag starting to form in this 50-point range. Because again, as tight as these ranges get, they can only get so tight, and eventually a new pattern has to emerge. And that's either going to be a break higher or break lower, and a new pattern starts to form. So again, Qs, much more of a defined flag forming in the Qs than like what we're seeing in the S&P. But again, very defined flag here. Nice to see these higher pivot lows that continue to form in the Qs. Buyers are stepping up. Sellers are still holding this key level of resistance down. So again, as these buyers and sellers meet, eventually one of the parties has to, kind of take over and either push the market higher or send us, lower. But as we get these tighter and tighter ranges, as an active trader, your risk gets smaller and smaller as these ranges continue to contract. And moving on, Dow 30, very much still in this very broad, breakout channel. Again, I have these highlighted here and just keeping it as visually simple as possible. Red, think sell. Green, think buy. So again, Dow right now, just kind of in the middle of this overall range. Again, very clear uptrend, much more defined in this channel than the Qs that have started to kind of consolidate, and the S&P also starting to kind of, trade a little more sideways than this very clear, diagonal range in the Dow 30 names. Again, rates kind of pushing up a little bit. Again, we really want to see this break lower at some point this year and touching this, macro trend line, but, a little bit of a bounce through this little resistance area. So, mortgage rates still chopping around. They're based on the 10-year. So going to be patient in that regard. Again, dollar getting smoked. recently, which again is a very good catalyst for, equities, for precious metals. Weak dollar is good for those assets. Now we are getting, pretty close to, support that's held since May. So, we had, as weak as it's going to get, this has been, the range for the last 6 months or so. And just like we're showing those, the ranges in the Dow, we're seeing the same horizontal. It looks like a, just massive bear flag, but as it comes into support, you often get those bounces higher, which could, negatively affect the market in the coming weeks. But for now, again, across the board, just broad strength, semis on fire, industrials, on a crazy run that they've been on, again, breaking out of their own, this is something you don't really see that often, these, diagonal channels and then the breakout higher, but industrials showing that strength. Small caps, leading this year compared to last year where they were, the last couple of years, they've really done nothing since 2021. Now they're finally pushing through highs. The prior all-time high area starting to act as support. So if you're in these small cap names, again, expect a flag to form in this 270, 240 range, but definitely keep an eye on adding through these breaks of these highs, down the road. Again, a lot of, very, very strong action across the board. Materials running right into, again, we had this line drawn for a few months now. I'll switch this over to weekly so it's easier to see. But we can see this, resistant trend line that we had drawn for a few months, and it's finally getting up to that profit taking area. Again, materials are up, more than, 15% to start off this new year. Materials are on fire, but getting a little extended at this resistance area. Definitely the time to, ring the register a bit if you haven't already. Again, consumer staples. Again, if you read the big picture at the beginning of the year, we were talking about the rotation of sectors. Again, last year's winners typically are not, the following year winners were last year's losers, try to play some catch up. And we saw that, we're seeing that already with consumer staples and consumer discretionaries. Again, staples pretty much were flat on the year for 2025 and already up, 10% this month. But again, resistance, just like we're seeing with materials, resistance still is resistance, So we're going to expect some selling up here, expect a little bit of some sideways action. Sure, it might be able to push up a little bit through this resistance area, but we've seen this for the better part of a year now. Should still expect a little bit more of a pull in, but great to see this sector that lagged playing catch up this year. Again, energy is still strong, but very close to macro resistance. So I'm going to zoom out a little bit more here. Again, this level goes back, many, many years, finally breaking through it. 2015 all-time highs. That's pretty much the next key level of resistance. So if you're already in energy, that's great. Trying to buy now, very late to the party when the upside is somewhat limited, as there's going to be very clear resistance at this level that's going back, nearly a decade. So expect some resistance there. That would be, the profit taking target. And telecom as well, pushing through new all-time highs this past week. Again, very textbook flag here, but again, hard to be chasing the breaks to resistance with these key sectors after these major runs. So again, a lot of other sectors still setting up. Really, the only weak one out here has really been utility, which we've talked about for a couple of weeks now. Just avoid until we see a test of this trend line. Again, for now, nothing really to do with utilities. Sectors that are setting up, just let them set up. On my end, one key trade that I've gotten into has been this Gilead. I'm going to zoom out a little bit. We're going back about 10 years for this Gilead. So back in 2015, this Gilead put an all-time high at around 120, based out for many, many years, and then slowly climbed back to all-time highs. And now over the past year or so, we've seen a very clear uptrend. We've seen Gilead battle with this 120 resistance area. And over the past couple of months, it has finally started to push through it and start to turn what was resistance, this 120, into support. Well, that's what we can see, December, January, that area that was resistance now starting to get supported. And that's why this was such a big focus on my end, was to buy through those highs. And that's where it, in the shorter term, again, I'm going to delete some of these lines, just keep it simple. But this area started to become support. And now 128 became the new mini resistance area. And on my end, name took 10 years to set up. It's finally back to that level. It's been flagging out in a very tight range. Resistance is now becoming support. And I just want to simply buy through the new high, which was at the time 128, and have a stop versus this 120 area that has now been acting as support. So there's, refer to this as a blue sky breakout. What I mean by that is this is all new price discovery. Everything up here hasn't occurred yet. There's no, it's never traded $200 before, or 180 or 140. There's no resistance up here. So anyone that's been holding Gilead until this time, at any point in the past, if they're still holding it, they're in a profitable position. So those people that are still in this winner, you would obviously be, very happy with the position. So you're not as reluctant to sell it. And when a name starts to break at the all-time highs, typically the positive news continues to come and push the name higher. So these are, few of the reasons where, you can risk a few percent, buying 128 versus 120. I'm risking, $8 a share. But there's no reason why, a year from now, this name can't be, near $200 a share. Now, not to say I'm going to hold this for the rest of the year or however long. For now, you just take it week by week. For now, the 120 area is the key out if I'm wrong in this idea. But for now, since I've gotten in, it's continued just to break out higher, showing me that, the buyers are here. So, a lot of these times with these macro setups, they do take a long time to set up. Again, it's not like I've been watching this name for 10 years, but you have these alerts set, you keep an eye on them. And then, when they're going to go, again, it's much easier to buy through those highs and buy with the momentum than fighting with a name, this whole way up. Sure, you could have bought it at $65, but the patience of sitting through that slow climb here typically is much slower than the breakout move through highs. And Google, is a pretty good visual example of, what could be in store for Gilead, just, from a price action standpoint. So if we look at, Google, trying to buy it down here to climb back to highs, you're fighting the breakdown. You have to be perfect. It takes months and months to get back up here, where once Google was just clearing these highs, this is when you get these kind of faster moves. So Gilead could do something like this, where, it's breaking this 120 area, maybe it goes 30 or $40 and has to still really set up. But when you can continue to find these setups through all-time highs, you tend to get rewarded with these, you can see here, I'm going to just visually, what I'm trying to articulate is the length of time when you're buying all-time highs, instead of trying to, get the best price in the world and buy all-time lows, this move here takes you, 6 months to a year to get this 50-point move. You wait for the all-time high break, you get a 130, 140-point move in months. So again, this takes years and years to wait for the right time. But this is why we try to focus on buying the all-time high breaks instead of trying to be perfect down here, buying 52-week lows, because these moves, you can just see the arrow, how slow and diagonal it is, where when you're buying through those highs, you get that push because everyone's trying to, rush through the door because Google has nothing but positive news behind it, where when it's at lows, everyone, basically hates the name, so to speak. So let's move on a couple other key names to keep a close eye on. Again, this Hyatt, again, we're talking about buying names through all-time highs and why we do that. This Hyatt Hotels is showing us this breakout through this 168. So, we can go back, pretty much since last year, can't break 168, cannot break it, continues to get back up there, and it's trading this very tight range and battling with this very clear entry here. So once you can get a break and push through 168, like the Gilead, like the Googles, we should see higher price action much more quickly than the bounce off lows back to highs takes to happen. Next up, we have this Tesla. Again, we're seeing a very similar pattern develop that we saw. We took full advantage back in September through this 360. We had a phenomenal trade in it. I finally took some profits through this 440 area when it looked like this thing was starting to kind of H over and the market's a little more volatile, but still was a nice, 80 plus point trade that was green every day since we got into it. It did hold this key support area, which it looked like, last week it was going to start to break and kind of H back over. And we've seen how fast this name can sell off, where when support does get broken, this is not a name when you want to get in front of its way when that breaks. So potentially may have gone to this too soon, but with that being said, we sold this 440 area. We can kind of see 450 setting up again. And if it does something like it did here, where again, it chops around, continues to trade inside of this little range here, we get a couple inside days. There's no reason why we can't get back into this trade for at least a run up back to this 500 all-time high. Again, this is going to act as psychological resistance, that big round number. So just keeping this Tesla on the radar for a tight risk entry. For a name like Tesla, you got to risk, 3 to 5% realistically for a very tight risk entry in the name. But if that does set up through this like 440, 450 area and get a move back to 500, can easily get back into the swing again. Now, for those trying to chase the silver, I was, posting about it earlier this morning. This 100 is a big psychological number for silver itself. Insane gap up. Again, these are not moves that are very sustainable when they get, this vertical. There's no support anywhere on this chart that once this nearly vertical line starts to break to the downside, these moves back down to reality happen much more quickly than people can expect. So, if you're in silver, congrats, but this is definitely the time to be more cautious, where again, based on this massive, doji at highs, low a day keeps you in. If you follow this whole rally up, if you trailed this, just, via prior low a day or low a day, you pretty much stay in for most of this rally while limiting your risk. So definitely getting a little frothy up here in the silver space. Again, personally, I really think this is kind of like a blow off top. Gold, same thing, maybe gets another little run, maybe up to 5,000 an ounce, but this definitely seems more the cash bringing areas than trying to clamor in and chase it. And that's what happens, what people do is people, chase things, which is what it is. But we saw this back again, this chart looks comically small here, but back in 2011, you had another similar 200-300% run up in silver. You saw that, you can see the same thing, insanely vertical run, very clear doji at highs, and then the breakdown follows. Now, what typically kills a lot of these commodity trades is when they, when the lenders change their margin limits. This is really what blew up silver back in 2011, was they raised the margin limit, and then people are just forced to sell and get liquidated. And that's, If that happens at this point, expect move back and move back down lower. So definitely just want to be chasing these things after, they're up 100% in a month. It's just not a sustainable move. Okay, moving on. Again, we got this SMCI. We can definitely see this kind of like support area in the name. We can see this has been support. I'm going to draw a couple quick lines up here. Up here, clearly resistance, just disregard the colors for simplicity. So again, looking to buy off support, looking to sell into resistance. And this, 32 area in SMCI recently has been, setting up quite a bit. Again, it's not the, my favorite chart out there, but when this name does wake up, it definitely does get going. So as it continues to pull back into this range, if it can hold and not test these lows of 28, form a higher pivot low, and then battle back up towards 32, you'll get that move for, this little downtrend break. And, a lot of room for this thing to, get even a bounce, into the 40s. So keep an eye on that. Again, we're going to keep talking about this AS until it tests this 40 level. Sneaky buyback through 40 for this AS. Again, some of these credit card names we talked about a few weeks ago when Trump was talking about trying to cap the interest rate on credit cards at 10% for a year. Again, some credit card companies have leaned into it. Some credit card companies have not. JP Morgan was one of the ones that, pretty much outright refused it. But we're seeing that, there hasn't been this massive breakdown in these credit card names. Just holding up, American Express holding up its support. Visa kind of at support with a little support buyback through this. We're going to say 333, 332. So a little bit of this, again, I wouldn't be dying to buy these credit cards, but if you're in them or looking for ways to add, buying back up versus these lows could be, a nice little support buyback here. So the MasterCard, you're buying 540 versus 520. Again, if this area breaks to the downside, definitely not the best sign. But for now, a lot of these names have been holding up. Again, even Capital One still within its overall range. Nothing really has broken. Again, this is kind of when the news came out. So they're still doing all right. And if you're looking for setups, just know that these recent lows or these key areas, these are the key outs in the names. Next up, we have this LIVN. Started to go a little bit today. Disregard this line. Not sure why it's there. Again, textbook bull flag. SARS is technically triggered today through 664. And then you also have, this breakout through the 65, 50 area. Nice textbook flag. Tight risk here, dollar-ish risk. Again, healthcare has been very strong lately. UNH, again, smoked on some news about, on their earnings and some changes with Medicare. So seeing this down 8%, again, definitely don't want to walk into this one tomorrow. So keep that one off the radar. Triple R, nice full bull flag forming through 64 versus 60. MEDP, again, multiple attempts at resistance through this 625 area. You can see support. So keep an eye out for that eventual climb back to 625 and higher. MHO, again, home builders got a little bit of love a few weeks ago, kind of just pulling back marginally into the recent range. So MHO, another home builder name, very clear level of resistance through this base break of 140. So maybe earnings is the catalyst that pushes it through. But for now, just waiting for that breakthrough 140. And last but not least, we have this EMC. Again, the Chinese names definitely been getting a little bit more love lately. And we can see, this flag forming through this 49 area. Again, a lot of these Chinese names can be a little gappy, but very defined flag here, getting very tight. So you just want to be waiting for that, next, let it pull in a little bit, let it set back up, and then push back up to this 49 in the next coming weeks. So definitely a lot going on. Key thing's going to be Wednesday with the Fed. We'll see what Jerome Powell does. A few of the key mega cap names reporting this week. So just know the names you're in, know when they're reporting. If you have any questions, just post them in the comments below. I'll be glad to help. Enjoy the rest of the week.